everybody, and welcome to the 46th edition of LM's Weekly Wrap, our weekly program to cover the markets. This week has been very interesting from a market point of view. There have been a lot of developments on the domestic front as well as the international front. On the global market front, we have the uncertainty with regard to the debt ceiling in the US. But some assurances coming that things will be resolved, and I think that has given the much needed fillip to the markets. The domestic markets continue to soar high, and we have temperatures also which are soaring high. Markets are soaring high, and of course, as we come to the end of May, of course, all eyes will be on the rain gods. Whether they are going to oblige us in a normal way. It's been a very interesting earnings season also. We've seen a lot of commentaries coming from prominent companies, and overall markets have cheered this earnings season. For more on the global markets as well as the domestic markets, I am joined by Jash Shah. Jash, welcome to the show, and kindly take us ahead from here.
Thank you, sir. Thank you for shedding some light on the global developments as well. But I'll start with the Nifty levels. We've seen Nifty touching about 18,500 today. Last week also, the Nifty was at similar levels, but it has been consolidating by 200 to 300 points in the last 1 week. But I think we had mentioned that we see going Nifty northwards to 18,800 or 900 levels. Because that is its consolidation phase. That's what I would say. It has to go back to the top levels, but it can't be a sure shot. But the way today Nifty has closed, we can see that it is inching up towards that, because in the last 2 days all the index heavy stocks have started gaining momentum. If you go to see, the Reliance was one of the big movers today, and I think it was a much awaited move by Reliance. More light will be shed by Nirav sir. But all in all, I feel we are placed in a very good phase of the market right now. But nevertheless, as I always say, keep booking profits, because some kind of news also impact the market, like the global developments, and we might see a downtick over there. But as far as we see in the last 1.5 months, the investors and traders have earned money. Coming to the US markets, as Sir rightly said about the debt ceiling, we are only $70 billion away from reaching the debt ceiling, and we are less than 7 days from the June 1st deadline of US defaulting. There have been positive cues, but the investor pessimism still remains. The volatility index has increased by 10% to about 20 levels, which is slightly concerning over there. That is why the investors are more pessimistic. The economy is too big, and they keep giving cues. I think the debt ceiling should be raised by some percentage point to give slight relief to the investors, because the global market depends on it. But now coming to India, India has been in a very good position. There was a recent study in which it said the chances of India going into recession is 0%, whereas Germany has already entered recession in the last quarter. So that shows how strong our economy is. And by that, I would also like to mention, as we keep talking about the debt markets, we feel the interest rate cycle in India has peaked out. If not the global US markets, we feel it has peaked out. Even if we might see a 20 basis points hike, but the YTMs are not showing that. We are slightly below 7% over there. So I think this is a good time to start building up long debt positions, as if not this year's end or early next year start, we'll start seeing some kind of rate cuts. That is a big cheer over there. So you can obviously see at those active volatility funds and park your money over there to get a smart double-digit return in the next 2 to 3 years. So I think that we are at a very interesting point over there. India's strength is being seen by the FIs also. They have been constant investors since the last 2-3 weeks. We had said that last week as well. And I feel we are definitely placed very well. And now we have seen the end of the earnings season also. That will be taken over by Nirav sir. And that's it. Happy investing.
Yeah, thank you, Jash. So, as rightly pointed out, the market mood continues to be quite bullish. And first of all, coming towards the end of the earnings season, I think, as pointed out by us time and again, that this market is being driven. All the heavy lifting has been done by the banking sector as well as the auto sector. So I think both these sectors are in a quite a sweet spot. It is estimated that for FY24, the banking sector will contribute to more than 44-45% approximately of the total earnings. So the entire heavy lifting is definitely going to be done by the likes of private sector banks, NBFCs, as well as the public sector banks. Now there's massive under ownership in the public sector banks, so I think this is a spot which investors should concentrate on going forward. We've seen some decent results from the likes of Bank of Baroda, State Bank of India, etc. So I think PSU banks also could be in a sweet spot on account of these developments. As far as the auto sector is concerned, I think auto sector had a dream run in the last FY23 and reporting double-digit growth, and it's unlikely that we are going to see that kind of a growth in this year, because definitely we expect the growth to moderate, and that is what is the market view also. But nonetheless, I think today's results, the strong results which we have seen from Mahindra and Mahindra, are testimony to what is happening in the sector. We've seen Mahindra and Mahindra report very strong PAT, profit after tax. Revenue growth has been about 30%, profit and net profit growth has been about 50%, and I think the outlook is looking very strong. The profitability, net profitability, has exceeded 10,000 crores. So a dream run as far as the auto sector is concerned. And along with the auto sector, we are also seeing some very good movement in the auto ancillary space. For example, the tire stocks. Most of the tire stocks are ruling at 52-week highs. This is on account of the fact that the raw material prices have softened, and they are likely to moderate further going forward. And we are also likely to see an improvement in the demand. We are likely to see replacement demand coming back. So tire stocks have been virtually on a tear. Apart from this, we have auto ancillary stocks which are also doing well. In this week, we saw Mahindra CIE, Mahindra and Mahindra has exited completely clean out trade of 3.2% stake which has been sold in Mahindra CIE. Apart from this, Sona Comstar continues to do very well. We have Sundaram Fasteners which is doing well, Swaraj Engines which is doing well. We have Suprajit Engineering, Minda Corp, which are doing quite well in the auto ancillary space. So very good quality ideas in the auto ancillary space. We have tire stocks which are doing quite well. And next sector which will be covering apart from banking and auto is the FMCG sector. I think the FMCG sector, Nifty FMCG index has made a new high today, and we saw very good momentum across the board, whether it was Hindustan Unilever Limited or Dabur or Marico, Imami, even the smaller stocks like Varun Beverages, etc. So it's across the board we saw some very good momentum in the FMCG stocks. So the FMCG sector has also contributed in a very positive way to the growth in the markets. Coming to the markets, of course, today we had strong winners like Reliance Industries. Market got a fillip from Reliance Industries, Sun Pharma on account of the strong results, and HUL, Hindalco. All these stocks moved up in trade today. So these have contributed in a positive way. And next sector, coming to capital goods space, I think some dent was seen in the capital goods space, especially the likes of Siemens, ABB. Siemens, more of a corporate governance issue which has impacted the markets. Next sector which has hit 52-week high or which is trading at record highs is the paint sector. We saw again a very good performance coming in from the paint majors, whether it was Asian Paints or whether it was Berger or whether it was Consign Aerolac and ExxonMobil. All these stocks are also trading at their respective yearly highs. So there again we are seeing the traction. Hotels, as we have pointed out, hotel sector is at the cusp of a major upcycle. and I think hotel stocks continue to do very well, for especially if one were to look at a stock like Indian Hotels Limited, where there is a wide range of portfolio, different types of brands, whether it is Taj, whether it is Selections, or whether it is Vivanta, Ginger, Ama Trails, etc. So and Taj sets, of course. So I think this year has been a very very breakthrough year for Indian hotels, because they have touched revenues of 11,000 crores, 1,000 crore PAT, 33% EBITDA margin, and the company has indicated that is very confident that this 33% EBITDA margin is sustainable in the near future. Apart from this, I think East India hotels also looking quite good. We feel East India hotels could be very interesting case, because both Reliance as well as ITC are investors in this company. So the stock is moving up, and with the prospects of the sector improving, we feel that M&A activity could also pick up sooner or later in this particular sector. So I think apart from this, we have Lemon Tree Hotels, Kamath Hotels, Mahindra Holidays and Resorts, our weekender stock idea, Taj GVK, all have been performing quite well. So hotel sector is a sector to watch out for. After hotel, of course, it's a hospital space. I think a little bit of a paradox. You have hotels, at the same time hospitals. We are seeing very good momentum in the hospital space as well, healthcare. We've seen positive commentary coming in from Fortis Healthcare, from the likes of Narayana Hridayalaya, or from the like of Max Healthcare. All these stocks are trading at near their 52-week highs. Fortis has indicated that average revenue per occupied bed has shot up. Their occupancy levels have been very very impressive, and Max Healthcare has also indicated that hospital business is a multi-decadal opportunity. It's a multi-decade opportunity for the years to come. So I think funds are also looking in a very positive way at the hospital business, so one can watch out for that space also. Apart from this, we have water treatment firms which are doing very well. There's a lot of interest in desalination projects. There's a lot of interest, and we've seen firms like Wabag, Ion Exchange, we've seen Thermex, Dinora, etc. perform very well in trade. So this is again one sector which has done exceptionally well. Apart from that, I think the real estate space is doing quite well on account of the positive developments over there. We are seeing good momentum across the board in the railway space, and in railways I think we've seen some very good numbers being announced by companies, and in defense there have been certain disappointments, but overall I think the defense scenario also continues to be quite strong. Last but not the least, our LM Weekender stock ideas, as has been pointed out by us, that LM Weekender stock ideas continue to perform exceptionally well. We had yesterday a very very roaring session where some of our Weekender stocks performed well. At the same time, we had Elecon Engineering, which has become a multi-bagger stock. We had Schneider Electric, we had Salzer Electronics, we had Titagar Wagons, we had RK Forge. All these stocks have performed exceptionally well in the markets, and I think in line with this, we really urge you to follow these stocks and invest in these stocks with a medium to long term horizon. I think a lot of other things to discuss, but time paucity of course does not permit us to go beyond this. But we will revert back we will be back with our commentary next session, and I think for the closing comments I'll hand over to Jash.
Thank you, sir. I think it was a quite an insightful session with what was happening in the global developments and global markets, and also the Indian markets, and of course the whole weekender stock ideas and the results season coming to end. So we look forward to meeting you next week. Thank you, and like, share and subscribe, and download our app InvestMart. Thank you.
Thank you.